The West and the East both value their gold, but for different cultural reasons. I have an important news story that shows how these 2 points of view impact the present and future value of your gold, so stick around. Welcome to Silver Heist. Thank you to our returning subscribers and guests. We're a channel that likes to buy physical gold and silver, and we like a coin with a good story. If you like those things, please subscribe. Well, the West values their gold, and the East values their gold, for different reasons, but are the two sides of the same coin. Let's go to an important news story that's going to explain the present and future value of your gold. The Financial Times, the new gold rush, Western investors offset soft Eastern demand. As ETFs helped push the price to record highs, Indian and Chinese consumers are selling the precious metal. And this is September 28th, 2020. Warren Buffett always mocked people who invested in gold, calling it a useless metal that gets dug out of the ground in Africa or someplace, and a way of going long on fear. This year, however, the Sage of Omaha joined investors, including the world's largest hedge fund, Bridgewater Associates, in buying into the latest gold rush, which helped push prices to a record high this summer. During the second quarter, Mr. Buffett's Berkshire Hathaway bought a $565 million stake in Barrick Gold, the world's second largest gold miner. Shares in Barrick, which mines in Africa, Latin America, and the U.S., have risen 37% since the beginning of April. In the second quarter, Bridgewater invested in gold-backed exchange-traded funds, which allow investors to buy physical gold like a stock, worth $316 million, according to company filings. Such interest from Western investors has triggered a rise in the gold price from a low of $1,160 in the summer of 2018 to a record high of $2,073 an ounce in August of 2020, making the precious metal one of the best performing financial assets on the planet. Growing fears over the economic impact of coronavirus and negative bond yields have seen more than $60 billion invested in gold-backed ETFs this year, 50% more than in 2009 during the financial crisis. The pandemic has convinced investors that gold belongs in their portfolios as a hedge against frothy equity markets, rock-bottom interest rates, and a fall in economic output. Some large investors want gold as protection against possible deflation caused by an economic slowdown or a converse rise in inflation as governments pump money into the system, according to David Tate, chief executive of the World Gold Council. Exchange-traded funds are piling in total assets under management by gold-backed ETF ounces in millions. From January 2020 through now, the ounces held in ETFs are going up. After initially falling in March as global stocks collapsed, gold had rallied by 22% by the beginning of August. It has focused a lot of people who had historically looked at gold as the Armageddon trade, says Mr. Tate, to look at it through a broader lens. Yet in gold's traditional heartlands of India and China, demand this year has been at best tepid, with buyers in the two biggest consumer markets selling their gold holdings or borrowing against them as prices hit record highs in local currencies. In China, gold is selling at $53 an ounce discount to global markets due to the weakness in domestic demand and restrictions on exports of the metal. With retail consumption a key signal of the commodity's strength for institutional investors, it is a divergence that could threaten gold's rally if Western demand wanes, as it did after the financial crisis when gold prices collapsed from a high of $1,920 an ounce in September 2011 to nearly $1,200 in 2013. Gold ETFs now make up to 35% of global gold demand compared with just 6% a decade ago, but inflows have started to slow. The world's largest gold ETF, the SPDR Gold Shares, registered withdrawals of money in September for the first time in 8 months. An abrupt halt to gold's rally would hurt some of the world's largest investors and remove one of the few bright spots in global stock markets outside of large technology shares. It would also lead to losses for retail investors who face an uncertain job market due to the pandemic and continued low interest rates on savings accounts. Gold prices have fallen 9% since August's high, while shares in gold miners have fallen by 13%. One risk scenario here is that Asian buyers put a floor under the market, damaging the confidence of retail investors who had bought gold-backed ETFs, says Adrian Ash, head of research at Bullion Vault, an online gold exchange. But with demand being so abject in the big consumer nations, where will that floor be? Fallen consumer demand. Popley Eternal, a jewelry megastore in a busy neighborhood of India's financial capital Mumbai that has traded for nearly 100 years, typically caters to the bustle of customers shopping for gold necklaces and earrings ahead of weddings and festivals. Items start at around $680. But footfall has not recovered to pre-pandemic levels since the shop reopened in June after the country's strict coronavirus lockdown was lifted. The 3-month lockdown brought virtually all economic activity to a halt. Suraj Popley, the owner, says the company has cut its staff by around a quarter to 20, with sales so low that any item sold in the current environment is considered a bonus. Indian consumers hurt by the economic fallout are opting instead to sell their family jewels or borrowing against the precious metal to make the most of high global prices. People are coming to sell gold in case they require cash, in case they require liquidity, he says. Very few people are coming to buy. And this chart shows that half of the consumer demand for gold comes from India and China. India and China combined for more than half of global gold purchases, but demand fell by 50% in India in the first half of the year, according to the World Gold Council, and just over half in China, although Indian demand picked up in August. In India, the precious metal plays a uniquely important role in family, festive, and religious occasions. The South Asian country holds the largest stock of gold in the world, according to UBS, with 25,000 tons owned by households and stashed in temples. Even for investment, many Indians traditionally prefer to hoard the physical metal rather than buy into ETFs or other schemes. Gold jewelry confers status, while it can be bequeathed to children and pawned in times of need. So speaking of hoarding, I'm going to open this up later this weekend, so stick around to see the latest addition to my gold hoard, as they say. But demand for jewelry has plunged, hit first by the dramatic lockdown, which forced retail outlets to close, and now by the deep economic and public health blow the pandemic has dealt the country, which has recorded more than 5.8 million coronavirus cases and more than 92,000 deaths. Weddings have been postponed as India records more than 80,000 new infections a day, while the economic pain, gross domestic product contracted 24% in the 3 months to the end of June, has reduced the appetite for ostentatious spending. Shekhar Bhandari, head of precious metals at Kotak Mahindra Bank, says he expects demand to creep back up once the worst of the pandemic is over. Have weddings been postponed? The answer is yes, he says. Is the number of marriages over the long term going to decrease? No. The pandemic has, however, exposed a longer-term fall in demand for physical gold in the country of 1.4 billion people, with rising financial literacy and access to products like mutual funds, prompting many to diversify their holdings away from the metal. Consumer demand has fallen from an average of 900 tons a year from 2010 to 2015, below 700 tons last year, according to UBS. China, too, has been hit by a fall in jewelry purchases as a result of coronavirus restrictions and a hesitation to buy gold at high prices, Demand in China hit its lowest level since 2007 in the first half of the year at 152 tons, according to the World Gold Council. The social and economic disruption of the pandemic risks accelerating the decline of physical gold demand in India and China, undermining a vital consumer base for investors around the world. This year, gold bars have been shipped from Asia to vaults in the US and London via refineries in Switzerland to back the rising demand for gold ETFs. But if Western demand slows, those volumes could start to weigh on the market, putting downward pressure on the price, according to Jeremy East, a Hong Kong-based former Standard Chartered banker. There's no gold going into China and very little going into India this year, Mr. East adds. That means the Western ETF guys need to keep buying, especially if at the end of the year China and India are still not buying. That gold has got to find a home somewhere. The market needs more money to come in to keep absorbing this gold. Chinese consumers prefer to buy gold bars that they store at home rather than ETFs. Mr. Tate says he believes new financial products backed by gold in India and China will grow exponentially over the next few years, aligning the markets with the West. That would better link Asia's gold markets with Europe and the US, he adds. All quarters of the world gold market will be fully optimized at that point, says Mr. Tate, a former investment banker. Western institutional and retail, as well as Eastern institutional and retail investors, will all come online over the next couple of years. Gold buyers are showing signs of fatigue. COVID-19 cases are on the rise. Governments are starting to panic again. Economies are facing down the barrel of a second lockdown. All in all, it should be a perfect storm for gold, he says. There's too much uncertainty in the world to be short gold. Well, the Financial Times seems really excited to homogenize and optimize the global gold market, but I think the cultural differences are better. In the past, the West buys when gold is expensive, and the East buys when gold is cheaper. So why homogenize that? So it all depends on your point of view. So as you stand on one side of the world, you see the sun rising, but someone on the other side of the world sees the sun setting.